Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine revenue and overhead budget. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. Revenue budget. Revenue budget is the aggregate of the various incomes accruing to a particular ministry, state, or local government. Revenue budget is the aggregates of the various incomes accruing to a particular ministry, state, or local government. The aggregate of the various incomes accruing to a particular ministry, state, or local government, that is said to be the revenue budget. The revenue of a government, or the government revenue, is derived from two major sources of government revenue. Government have two major sources of revenue. We have oil revenue and non-oil revenue. Oil revenue and non-oil revenue. So these are the two major sources of government revenue. Let me give you a format for revenue budget. So revenue budget for the year ended December 31st, 20XX. I want you to know that in the preparation of revenue budget, you add up all revenue from various sources. That is what we want to do. So remember, I've categorized sources of government revenue into two. We have the oil revenue and non-oil revenue. So I want to start with oil revenue. So oil revenue includes proceeds from sales of crude oil. Proceeds from sales of crude oil. Proceeds from sales of crude oil. Then we also have the NNPC earnings. NNPC earnings. The royalties from crude oil. All revenue from crude oil, you might have them here. You know, if it is local government, the source of revenue of local government varies. You might have the share of federation account and the those revenues that are peculiar to the local government. So we have non-oil revenue. Non-oil revenue. Revenue from other sources other than crude oil. So here you might have personal income tax. Personal income tax. Then you may have company income tax. Company income tax. You might have excise duty. You may have import duty. Besides, some of this goes into federation account. This is federation account revenues. This is federation. This is federation. This one, it depends on whether it is the federal capital territory. If it is federal capital territory, it goes into consolidated revenue funds, CRF. So it depends on the section you are, the particular ministry you are given under exam condition. So you may also have the export duties. Export duty is the Federation Account Revenue Head anyway. But I just want to give you, just know that you want to sum up all the revenue from the various sources, stamp duty. So you get the total of non-oil revenue. Then when you add the oil and non-oil, you have the revenue budget for the period. Revenue budget for the period. So that is for that. I've told you your exam question. The preparation of revenue budget depends on the ministries involved or the ministry you are given exam, whether it is a ministry or parastatals or the federal government or local government. So it depends on whichever you are given. Just know that you want to aggregate the revenue from their various sources. Overhead, cost, budget. Overhead, cost, budget. Overheads are indirect costs. Indirect cost. The aggregate of indirect materials, indirect labor, and indirect overheads, and indirect expenses. That is overheads. Overhead cost budget is prepared using the principle of incremental or traditional budgeting approach. It is prepared using the incremental or traditional budgeting approach. It means you'll be given the figure for the base year. Then you are going to adjust the base year figure for inflation. That is incremental or traditional budgeting approach. The base year will be given base year. The base year figure you are given, then you adjust that base year for inflation. That is incremental budgeting approach. So I've told you overhead cost budgets are prepared using the incremental or traditional budgeting approach by increasing the previous year budgeted expenditure by inflation rate. Increasing the previous year budgeted expenditure by inflation rate. That is overhead cost budget. I want to solve question from ICAN November 2022, Public Sector Accounting and Finance. Keep watching. Non-local council development area, LCDA, of Bayelsa State has a population of about 1,548,412 citizens based on the last census carried out a year ago. An annual population growth rate of 6% and a 1% rural to urban migration in the past years has been estimated for non-local government, non-local council development area. The following additional information relates to the LCDA. 1. The population strata show adult men 50%, adult women 20%, children 30%. 90% of adult men and 80% adult women are taxable with a flat tax of 800 naira per month. 3. The LCDA has a central market building that is let out to traders with rent as detailed below. 2 floors of warehouses, 8 million naira per floor per annum. 300 lock-up shops, 120,000 naira per shop per annum. 150 shares, 82,000 naira per shed per annum. 4. The market opens for 28 days in a month. It is estimated that 17,200 hawkers trade in the market on daily basis and are charged 200 naira per day for 25 days in the month, while the market also witnessed 1,500 additional hawkers on each of the 3 market days in a month. 6. There are 2,411 houses which are charged local tenement rate of 1,000 naira per annum. 7. The overhead cost for the LCDA in the year 2020 are detailed below. Motor vehicle maintenance 540,000. Drainage cleaning 185,000 naira. Transport and travelling 140,000 naira. Office maintenance 120,000 naira. Hotel accommodation 223,000 naira. Utility services 200,000 naira. Others 240,000 naira. 8. Inflation factor is estimated at 25%. Required. Prepare a revenue budget and overhead cost budget of non-local LCDA for the year ended December 31st, 2021. Now let's have the solution to the question. Solution. The name of the council is Non-Local Council Development Area of Bayelsa. Bayelsa of Bayelsa State. You want to prepare revenue budget for the year ended December 31st, 2021. Non-Local Council Development Area, SCDA, of Bayelsa State has a population of 1,548,412 citizens based on the last census carried out a year ago. So, if a census was carried out a year ago, that means this is the population of the local council in the year 2020, since we are preparing the budget for 2021. So now, let's have working one. Working one. 2020 population of the LCD council or LCDA is 1,548,412. So we need the estimated population of the LCDA in 2021. Back to the question. Based on the last census carried out a year ago, an annual population growth rate of 6%. So if there is a 6% population growth rate, so we have increase in population. So our growth rate, which is 6% of 1,548,412. So calculate 6% of this. 6% of 1,548,412. So that means we have a growth rate of 92,905. So if you add it to this, plus 1,548,412, then the estimated population in 2021 should be 1,641,317. This is the estimated population of the SCDA in 2021. Now back to the question. And a 1% rural to urban migration in the past year has been estimated for non-LCDA. If you have rural to urban migration, while people moving out of the LCDA is equivalent of 1%. Now, migration. or emigrant. People moving out of the SCDA. That is 1% of the estimated population of 1,641,317. That is the emigrant. So 1% of 1,641,317. So that gives us 16,413. And if you remove that from 1,641,317, so you'll be left with 1,624,904. This is the estimated population of the SCDA in 2021. So that is 2021 population. Now, back to the question. The following additional information relates to the LCDA. 1. The population strata shows adult men 50%, adult women 20%, children 30%. What are the number of adult men? Now, population strata. Population strata, that is population division. Then adult men. Adult men, that is 50% of the population of 1,624,904. Then adult women. That is given to be 20% of the population of 1,624,904. While children, that is estimated to be 30% of the population. 30% of 1,624,904. So, what do you have? 50% of 1,624,904. That gives us 812,452. That is adult men. Then adult women is 20% of the population, which is 324,981. Then children, 30%. We have 471. The population have been stratified. Now, back to the question. Note 2. We have 90% of adult men and 80% of adult women are taxable with a flat tax of 800 naira per month. Remember, we are preparing budget for a year. Since it is per month, then that means for a year will now be multiplied by 12 months in a year. Now, let's have the revenue from taxation. Revenue from taxation. We have adult men. The adult men who will pay tax. So we have 90% of adult men. So 90% of adult men. The number of the population who are adult men is 812,452. Now we have 90% of 812,452. 5.2. The taxable population of the adult men is 90% of this. And the tax rate is 800 naira per month. 800 naira per month. And for a year now, we have times 12. Times 12. We have 12 months in a year. So that gives us 90% of 812 for 5.2 times 800 times 12. So we have 7019 585 585 585 280. So that is 7,090,585,280. Then adult women, the taxable population, and 80% adult women are taxable. So those who are taxable from adult women is 80%. And what is the strata? What is the proportion of the population adult women? We have 324,981. 324,981. This is the proportion of the entire population who are adult women. Then it is not the entire number of adult women that are taxable. Only 80% of the adult women are taxable. And the tax rate is 800 naira. Multiplied by 800 naira per month for a year, 12 months in a year times 12. So we have 80% of 324,981 times 800 times 12. That gives us 2,495 852 544 544, which is 2,495,852,544. So if you add it to the revenue on tax paid by adult men, 7,019,585,280. So we have 9,515,437 824. 9,515,437,824. That is the total revenue from taxation. You have children, but children is not among the taxable population. Since children is not among the taxable population, therefore we are going to exclude the children from the tax computation. 3. The LCDA has a central market building that is let out to traders with rent as detailed below. 2 floors of warehouses, 8 million per floor per annum. This is revenue from central market. That is rent. Revenue from rent. Rental income or revenue from rent. We have warehouse. You were told you have 2 floors of warehouse, 80 million per floor. One floor is 8 million per floor. If 1 million, if it one floor is 8 million, therefore 2 million will be 2 times 8 million. That will be 16 million, and it is per annum for a year. So we have 2 times 8 million, which is 16 million. 2 times 8 million naira. So we have 16 million. Back to the question. Then 300 lock-up shops, 120,000 naira per shop per annum. One shop is 120,000 for a year. Then for 300 now, it will be 300 times 120,000. So lock-up shop. Lock-up shops. 300 shops times 120,000 naira. So 300 times 120,000. 300 times 120,000. That gives us 36 million. 36 million. Back to the question. 150 shares, 82,000 per share per annum. So we have for 150 now will be 150 times 82,000. So shares 150 times 82,000 per share. So we have 150 times 82,000. That gives us 12.3 million. 12,300,000. So that is all about revenue from rent. So we sum it up. So we have total revenue from rent, or total rental income or revenue, plus 36 million plus 16 million. So we have 64.3 million. 64,300,000. 4. The market opens for 28 days in a month. It is estimated that 70,200 hawkers trade in the market on a daily basis. If the market opens for 28 days and 17,200, they trade on a daily basis and are charged 200 naira per day for 25 days. Now, let me have working number 3. Working 3, which is revenue, that is hawkers revenue. So we have regular hawker, which are 17,200, and they were charged 200 naira per day for 25 days. You know, your budget is for a year, times 200 naira per day for 25 days. That is 25 days in a month. So this is for a month now. Then for a year now, times 12. So that will give us 17,200 times 200 times 25 times 12. So we have 103 2 1 2 3 then million. 1,032 million. Then other hawkers now. Others. Remember, since market open for 28 days, it is believed that our calculation is for 25 days. The regular is for 25 days. Then that means the 17,200 so is also expected to be part of those who will trade in the remaining 3 days. While the market also witnessed 15 additional hawkers on each of the 3 market days in a month. 1,500 additional. 1,500 additional. That means in addition to this, you have 1,500. That is what they said additional. So that means other workers now, which will be 17,200 plus 1,500. That gives us 17,200 plus 1,500. So which is 18,700. That is other categories of workers. And you charge them 200 naira per day. Then for how many days? 3 days. On each of the 3 market days in a month. That means for 3 days times 3 times this we have for 12 months in a year times 12. We have 18,700 times 200 times 3 times 12. That gives us 1, 3, 4, 6, 4, 0, 0, 0, 0, which is 134,640,000. So working number 3. So we have revenue from hawkers. Working number 3. We have regular hawkers. Then we have other hawkers. Revenue from regular hawkers, 1,032,000,000. That of other hawkers, 134,640,000. So for regular hawkers, 1,032,000,000. For other hawkers, 134,640,000. So you sum it up. Plus 1,032,000,000. So we have total revenue from hawkers. That is 11 666 664 0 0 0 0, which is 1,166,640,000. Note 6. There are 2,411 houses which are charged local tenement rate of 1,000 naira per annum. Per annum means for a year. So that means tenement rate will be 2,411 times 1,000. So let's have tenement rate. Tenement rate. The number of houses is 2,411, and they are charged 1,000 naira per annum. So the tenement rate will be 2,411,000. So back to the question. Note 7, the overhead cost. Note 7 is about overhead. It's not a revenue. Note 8 is an inflation. inflationary rate is given in note 8, so it doesn't affect revenue. So that means we have dealt with all the items of revenue in the question. So now, let's sum up our budgeted revenue. So you have the non-local government council. So we want to have the total revenue budget of the non-local government council development area. Now let's sum it up. 9,515,437,824. 9,515,437,824 plus 64.3 million, 64.3 million, 64.3 million plus 1,166,640,000 plus 2,411,000. So we have 10,748,788,824. This is the revenue budget or budgeted revenue for the period. Now, remember there are two requirements in the question. You have to prepare revenue budget, and we've done with this. And overhead cost budget of non-local government. Now, let's prepare the overhead cost budget for the non-local government. Let's have overhead cost budget for the year ended December 31st, 2021. I've told you that the overhead budget is prepared by adjusting for inflation in overheads. You are given the inflation factor of 25%. Anytime percentage is involved, percentage means it's made per 100. That means the actual will be 100%. So if it's increase, inflation will lead to increase of 25%. That is inflationary rate of 25%. That means after the adjustment for inflation, you'll be having 135%. Take note of this. That is for each items of overheads. You are going to increase it by 25%. So the first item, we have motor vehicle maintenance, 540,000. Motor vehicle maintenance of 540,000. If you jack it up by 25%, so we have 125% now, times 125%. Percentage means per 100. So that means you'll be having 540,000 times 125 divided by 100. You have to divide it by 100 because this is in percentage. So if you divide it by 100, it will be 1.25. If you multiply by this, so you have 675,000. Then the next item is drainage cleaning, 185,000. Drainage cleaning, 185,000. You increase it by, if you adjust for inflation, 185,000 times 125%. Then you'll be having 231,250. Then the next item is transport and traveling, 140,000. Transport and traveling, of 140,000. Then adjust for inflation in it. 140,000 times 125%. So you have 175,000. If you don't want to do it that way, you can calculate 25% of 540,000. Whatever you have at the result, you add it to 540,000. You calculate 25% of 185,000. The result will now be added to this. Calculate 25% of this, add it to it. So it will be giving you these figures. Then, after transport and traveling, we have office maintenance, 128,000. Office maintenance, 128,000. Adjust for inflation of 25%, so you have 125%. So 128,000 times 1.25 or 125%. Then you have 160,000. Then you have hotel accommodation, 2 to 3,000. Hotel accommodation, that is 2 to 3,000. Adjust for inflation of 25%, so you have 125%. 2 to 3,000. Then you have 278,750. The next item is utility services, 200,000. Utility services of 200,000, 125%. 200,000 times 125%. So you have 250,000. Then we have others, 240,000. Others, 240,000. Adjust for inflation of 25%. 240,000 times. So we have 300,000. So you sum it up. Let's add up everything. 375,000 plus 250 plus 175,000 plus 160,000 plus 278,750 plus 250,000 plus 300,000. Then we have 2,070,000. So that is the budgeted overheads. Budgeted overheads for the period. This is the end of the solution to this question. My next video, I will consider the aspects not yet examined in this video. Thanks for watching ZICA.